Hello, welcome to Edubbey dynamic page. Today, let us look at regulatory developments in cryptocurrency, navigating the evolving landscape. 1. Introduction. Growing importance of regulation. As cryptocurrencies gain mainstream adoption, regulatory bodies worldwide are increasingly focused on developing frameworks to address the unique challenges and opportunities presented by digital assets, blockchain technology, and related activities. 2. Regulatory trends and initiatives. Clarifying legal status. Regulatory authorities are issuing guidance and pronouncements to clarify the legal status of cryptocurrencies, defining them as commodities, securities, or currencies, and establishing regulatory oversight accordingly. Enhancing consumer protection. Regulators are implementing measures to protect consumers from fraud, scams, and market manipulation in the cryptocurrency space, including licensing requirements for exchanges, disclosure obligations, and investor education initiatives. AML/KYC compliance, anti-money laundering, AML, and Know Your Customer, KYC, regulations are being applied to cryptocurrency businesses and service providers to prevent illicit activities, enhance transparency, and ensure compliance with international standards. Taxation policies. Tax authorities are developing guidelines and regulations for taxing cryptocurrency transactions, investments, and mining activities, addressing issues such as capital gains, income tax, and reporting requirements for cryptocurrency holders. 3. Global regulatory approaches. Diverse regulatory frameworks. Regulatory approaches to cryptocurrencies vary significantly from country to country, ranging from strict enforcement and outright bans to progressive regulatory environments that foster innovation and entrepreneurship. International cooperation. Regulatory bodies are increasingly cooperating at the international level to address cross-border regulatory challenges, share best practices, and develop common standards for regulating cryptocurrencies and mitigating systemic risks. 4. Challenges and concerns. Regulatory uncertainty. The lack of regulatory clarity and consistency across jurisdictions creates uncertainty for businesses, investors, and innovators in the cryptocurrency space, hindering investment, innovation, and market development. Compliance burden. Compliance with complex and evolving regulatory requirements imposes significant costs and administrative burdens on cryptocurrency businesses, particularly smaller startups and innovative projects with limited resources. Innovation risk. Overly restrictive or burdensome regulations may stifle innovation and drive cryptocurrency-related activities underground or to jurisdictions with more favorable regulatory environments, potentially limiting the growth and development of the industry. 5. Future outlook. Balancing innovation and regulation. Regulatory authorities are striving to strike a balance between fostering innovation and protecting investors, consumers, and financial stability in the cryptocurrency ecosystem, seeking to create regulatory frameworks that support responsible innovation while mitigating risks. Regulatory convergence. As the cryptocurrency market matures and regulatory frameworks evolve, we may see greater convergence and harmonization of regulations across jurisdictions, driven by international cooperation, industry standards, and best practices. Continued evolution. Regulatory developments in the cryptocurrency space will continue to evolve in response to technological advancements, market dynamics, and emerging risks, shaping the future of digital finance and blockchain innovation. 6. Conclusion. Adapting to regulatory changes. As cryptocurrencies become increasingly integrated into the global financial system, businesses, investors, and stakeholders must stay informed about regulatory developments, comply with applicable laws and regulations, and engage constructively with regulators to navigate the evolving regulatory landscape and foster a sustainable and responsible cryptocurrency ecosystem.